I don't go, then pump the brakes. Heat side, either hype, let the trap unfold. Then pull 20 ticks and be done stone cold. Real Cornelius, candlestick king. Only 2% he lets that ring. Oh, put a 5 in the chat if you mitigate. He's banking 3% before he finishes his plate. If it's far for MC, you best sit out. He'll say, today's a no-trade day, no doubt. Doubt. He don't force the trade, don't chase the chart. Just waits for the candle to show its heart. Cornelius, look where did he look? He breaks down zones like a Jedi sword. First target off, break even set. He's teaching grown traders how not to sweat. Please, only 2%, don't play with fire. He'll mute the room if your greed climbs higher. With a hoodie on and his mic set low, he'll whisper it's cooking, but I won't go. No trade, no problem, he'll still teach gems. Structure, patience, and how the wave bends. He once caught a move with his screen half cracked, then called first target hit and leaned right back. Cornelius, stop, run, sage. He's turning your fear into zen like rage. Meditate, isolate, be mean with risk, and hit that 3% like it's breakfast bricks. Don't be greedy, don't force the trade. Make sure you journal, respect your edge. We don't chase the market, we let the market call us. Put a 5 in the chat room if you feel that. I'm Corey Faithful. I'm Corey Faithful. I call you faithful, who could smell a fake. He'd say, I don't know, I don't go, then pump the brakes. Heat side, either hype, let the trap unfold. Then pull 20 ticks and be done stone cold. Real Cornelius, candlestick king. Only 2% he lets that ring. Oh, put a 5 in the chat if you mitigate. He's banking 3% before he finishes his plate. If it's far for MC, you best sit out. He'll say, today's a no-trade day, no doubt.
Hey, welcome to the Sovereign Edge. My name is Eric DuPont. I am your host, and Today we have the continuation of a conversation with Grandmaster Trader, futures trader, that is, Cornelius Wilson Brown III. So, Cornelius, welcome again. Thank you for taking the time and joining us. Good to have you as usual.
Absolutely, absolutely. And Eric, I just want you to know I really, really appreciate you. Thank you so much.
Well, you're welcome, and we appreciate you as well. So, thanks for being here.
Yes, sir.
So, Cornelius, let me ask you something because today was a bit of a special day on the markets. You know, once in a while you have one of those,
Yeah,
and so tell us a little bit about it. Today was a non-trade day, and it was still a good day. So, how is
absolutely.
that?
Well, I mean, anytime that you can wake up and go to sleep with the same amount of money is a good day. And so that is the reason I say it's a good day. And sometimes it's better not to trade than it is to trade because to make up money is difficult. So I look at this as just a yield sign. It's just a pause. It's a comma in the sentence. It's still going on. And, you know, sometimes you have to yield. Sometimes you have to stop going from point A to point B. And point A is where we started, and point B, of course, is being a millionaire using this tool that we have. So just because you have to take a pause doesn't mean that you're stopping. Doesn't mean that there's a termination that's taking place. So today, very very strange day, if you will. As you know, our commander in chief has been in negotiations with different countries about certain things in terms relative to economics, and so he made a determination that he was going to work with Japan on some things economically, and those things had an impact on the market. Because institutional traders, they want to make sure that they're putting their money, they owe it to their clients, in the banking industry to do well. And so until they know what's going on, sometimes we have a pause in the market. And also there were some companies, big companies, especially some on in the tech sector, which influences the indices, which is what we trade. And so there were some earnings announcements that were being made today, and they had not happened at the time we were in the trade room. And so therefore, there was a stagnation in the market. Volatility was low, volume was low, because people were just sitting on their hands or on the sidelines waiting to see what the decisions were going to be made. Because you got to understand, these guys they're investing money into companies that are going to do well. And so sometimes they change, they switch companies, they determine that they're going to put their money in another place and go another route. And so what we have to do, because we're at the mercy of them and their decisions, is that we have to wait until they make a decision. And I like to say that, you and I as retail day traders, we're not pace setters, we're pace followers. And so that's what we do. We just follow along. I don't know if you've ever seen a dog race, but they have the rabbit, the electric rabbit, and that rabbit sets the pace. Sometimes in marathons, they have a pace setter where we are running and we cannot outrun the pace setter. And that is one of the reasons, there's a plethora of reasons why people lose their money in the markets. But one of them is basically they cannot be patient enough, and they cannot stay in their own lane. They cannot follow the pace that others are giving them. And so, that's unfortunate, but hopefully they'll find the Solomon Training University, and they'll find you, and where you're facilitating classes, and they'll be able to jump in there and get better at it.
Absolutely, and thank you for clarifying all this. I mean, when you have a day like today that kind of offers something new, or maybe not new, but that occurs not that frequently, it's always worth just talking about it, because
Oh yeah.
most traders want to trade. And I'll be frank, I'm always a straight shooter with you, and it. I was chomping at the bit today, and I'm like, there's some really good move that I could take on momentum alone. I'm like, no, I'm just not going to do it. I'm not going to do it. So I had to sit on my
Yep.
hands. But
Yep.
in the end, it felt good. And the reason I'm going to share with you why I didn't is because I knew that if I took a loss for some reason, it'd be really hard to make it back to recoup it today. And I didn't
Absolutely.
want to sit on that feeling, for the night and wait for tomorrow. So I figured I'm out. No trading day, and it's a good day. So
Absolutely. Absolutely. Because trading is a sum zero game. And I know I play on that sum SUM 0, but then I also play on it like this: sum SOM will end up with 0.
Right.
So it's a sum zeros game, and some will have 0, and it won't be me. So I just make sure I'm not the one with the 0, and that's just what it is. Because one of the things that I don't know which direction you want to take the conversation today, but I'll just say this just on the onset is that money is not made. See, we live in a capitalistic economic environment. That's a market-based environment. And it's a democratic environment, meaning that other people make decisions on the market, right? And in that case, you're not actually making money. You're just transferring money. Money is just being transferred digitally. So if you don't understand how the transfer works, then you'll enter the market trying to make money when money is not even there to be made. It's just there to be transferred from one hand to another. And I understand that transfer. And when you understand that, you cannot make it in this kind of economic environment without understanding markets, and without being market literate, and without participating in the markets.
Well, you make a really good point. And as far as conversation direction, I mean, you started, and I think it's as good as any other. Let's talk about that a little bit. So, when you say money transfer, can you flesh that out a little bit? Especially, we may have some people in the audience who have never traded before, and have heard the word market, stock market, but don't
Right.
really know too much about it. So, why don't you just give us a brief overview of how the market works? And I know it's a very broad subject, but kind of narrow it down, kind of give the cliff notes, if you will, if people still use those books.
Yeah. Well, basically, the richest 1% of the people in the country own one half of the wealth, and 2/3 of the people in the country they have to split the rest, and that's they either get it in inheritance or they get it through accumulation of debt, or they get it through the stock market, or they get it through real estate, or they get it through money markets. So that money is being transferred. And if you don't get into that circle, all of those that I just talked about, if you just try to work off of earned income, then you won't be able to participate in the market. So the futures market is a market that was created to hedge that people who bought stock, they would buy the futures market to go against the stock. So let's say that you bought a stock and the stock started going up. Well, then, okay, the futures market is going to go up and you're going to make double your money. But let's say there's a recession or a depression and the market starts going down. When the futures market, you can trade down and you can sell down. So as you're losing money in your stock position, you're gaining and recouping that money. So basically, you're not losing anything. You're not making anything, but you're not losing anything. And that's the purpose of the futures market. And so that is just one aspect of the market that we're in. And then, of course, we're moving on to stock and ETFs and all of that other stuff, here very, very soon, because our goal is to build a portfolio and start the wealth cycle. So that's what the futures market is for. It's for people who understand markets and know that they need to hedge against some of their stock positions with their assets in their portfolio. So people take it out of context and make it just something like it's trading is fun, is let's make a lot of money. No, but it sits inside of a portfolio. It's just one aspect of a portfolio, and its purpose is to hedge against losing stock positions.
That was a great explanation. Thank you, because it kind of clarifies. I mean, you don't have to just trade stocks or funds, but you can trade both, and one hedges the bets against the other.
Exactly.
So that no matter what, you can make money on both, or if you're down on one, the other one compensates for it.
That's it.
It's part of the entire wheel of wealth. Is that what I'm getting?
Exactly. And the futures market, the reason it's so attractive because it gives a low barrier of entry into the market, and then it has a high return. So it's a low barrier. You can enter with $400 and the returns are 1 to 3 to 10. I mean, I can just read our group me. I mean, people make 10%, 20%, 12%, 3% a day. And so that's just amazing. And the big institutions need the futures market because it helps balance out prices. So if there's an imbalance and then there's no, in other words, if let's say you made shoes and you're the only person in your town made shoes, well, you could charge $7 million per pair because there's no competition. And if there was no futures market, prices would just balloon, and this imbalance would not be closed. That gap would not be closed. But because you have the futures market, okay, it helps balance the overall market out, because people like you and I are going to take advantage of these imbalances, and we're going to make money. We don't care about the big corporations saying, I sure hope y'all don't mess up, my margin. Well, yeah, we're going to mess it up because that's an imbalance. Like, you can't charge those people all that much. So the market's going to go down here, and we're going to make money as it goes now. So you're going to have to bring your prices down.
Gotcha. So it's kind of acting like a regulation valve, if you will.
Exactly.
To bring things back into balance.
Exactly.
Since the market always seeks equilibrium.
Exactly. And that's why we always have something to buy, and there's always somebody who wants to sell it, and somebody wants to buy it. So illiquidity isn't a thing in the futures market like it can be in the stock market. So you can make money every day, well, except a day where the president says something abnormal and stops the market. But that's just not often.
Right. So no bad day on the market. Okay.
No.
Very good. Now, what would you say, because I'm sure you've heard it, I've heard it myself, some people say, oh, well, the market is like a casino. But we know that the market is not a casino, and it's also not an ATM. So it's not like, oh, I'm going to get on the market and just decide I'm going to make X amount of money. No, there's a flow to the market. So would you share a little bit with us, with the audience, how the market works? And I know it's very broad. Again, we could spend hours on it, but the abbreviated version of how the market works.
Markets is just simply, you talk about market, you talk about supermarket, you could talk about any kind of market, meat market, flea market. A market is just a place where somebody who has something to sell meets a person who wants to buy it. And if they like the price that you're selling, they'll buy it. If they don't like it, they won't. If they don't buy it, then you have to adjust your prices so that people will buy it. And so that's what we do. We keep those prices regulated by buying and selling and making determinations. So when we have the imbalances, then we step into that place where there's an imbalance and buy it, because we know at some point the price is going to do what? Rise, because there's a demand for it. Or we say, hey, let me take it here. I'm going to sell it because I know at some point the prices are going to go down and somebody's going to want it. They're waiting for the price to go down. So we hold something, waiting for somebody who says, I want it, I just don't want it now. It's like, oh, okay, well, I'll sell it to you here when it gets at this price. And then we make the difference in between. So we make money up and we make money down. So basically, markets just, what we do is we balance the market out. Again, I know that's almost redundant, but that's what we do. And there's always a place. Now, that's not gambling. That's going to the flea market and selling your tomatoes. That's not gambling. You have a price that you're going to sell them at. And if nobody meets that price, you're going to load your truck up and you're going to go back home. That's what we did today. We did not like the prices. We did not like the market the way it was going. So it's only gambling if we don't like the prices and still force our way in there, praying and hoping that if I buy this, somebody will get it for some reason. No. A market, we do a market analysis. There's nothing about it. There's no luck about it. There's no casino about it. Gambling is not gambling. We are making very, very sound, conscious decisions on what we're going to buy because we know we can sell it. And we don't buy anything we can't sell. Period.
So let me ask you this, because I'm in total agreement with you. I'm just wondering, because when you go to the supermarket and buy, I don't know, fish, chicken, or laundry detergent, you buy something at a certain price, but you get a product in return. Over here, I mean, it's intangible. It's a bunch of candlestick on a chart. The price is going up, is going down, but what are you getting in return? How does that analogy work between the market and, say, the supermarket?
That's a beautiful question. So I would say we're service-based. Somebody had to bring the eggs to the store. Somebody had to bring the milk to the store. The person who brought the eggs, they went and picked them up and they brought them. They did not care for the chickens, nurture the chickens. They didn't hatch the eggs. They didn't give the chickens medicine or whatever, and that's bad. But making sure that they are well, they didn't do any of that. All they did was showed up with the truck, put them on, and took them to the end user. So I'm not getting an egg in return. I'm not getting a chicken in return or anything. I'm getting paid for the transportation. We're being paid to take something to somebody who wants it for a later time. And we don't care. We're not in this for the delivery business. We're not in this to take delivery of anything. It's kind of like a real estate agent. I don't have the money to buy the house. I don't have the house to sell. I'm going to make money by putting these two people together. So I'm going to end up with money, not a house, not equity, money. That's why we do it, because we want the money that's working in between the manufacturers and the end users.
So in other words, we're supporting the companies that are part of the various industries that are themselves part of the index that we are trading. Is that correct?
Right. We may not be supporting the companies, but we're supporting the exchange between the companies.
The exchange.
We're keeping the prices to where people can still do business.
I see.
Because if we didn't step in, you would get a stalemate. I'm not selling any cheaper than this. And somebody said, well, I can't even afford that. And then boom, the economy would stop, the money would stop. So they said, no. We need some people in here that's going to create some competition. Alexander Hamilton, one of my favorite presidents, that's what he was all about. Competition, creating competition, not letting people basically control the market, one company, so that's what we do. We just keep everything regulated. I like that, that term that you use. We kind of like just, we regulate the market, if you will.
Gotcha. So we kind of preventing monopolies. We preventing stalemates.
Exactly.
We allow them to compete and may the best win.
Exactly. Everybody is working in the market, whether they know it or not. Everybody is, because you have to buy food, you have to buy stuff. All of these things that you have to buy, they come from publicly traded companies. But if you're not involved on the investing side or the trading side, you're just on the consumer side. You're participating, but you're participating as the meat for the sharks.
So you have no choice.
Yeah. So you're participating in the ecosystem. You're just getting eaten up every day. So, big fish eats bigger fish, and bigger fish eat big. So you're just always being eaten, by a fish that's a little bit bigger than you. We are up there with the sharks. We do the eating. Yeah. So we find sharks that's eating, and we say, okay, that's the way you're going to eat. Okay. But because we're trading like institutional traders, we just don't have the money to make the returns they make, but that's what we're doing. We're not trading like retail day traders. We're taking retail day traders' money every day. That's the money that we're taking.
Well, I'm glad you mentioned institutional traders, because I was kind of waiting for it a little bit in that. Can you explain a little bit? You talked about price movement. We trading futures. It doesn't matter whether the market is going down, going short, or going up, going long. We make money regardless. And as you mentioned, we follow the institutional traders instead of bucking that current. Obviously, they're big. They have a lot of money in their pockets.
Right.
Explain a little bit, if you would, how that works and why the price movement exists, and what is the influence of those institutional traders, if you would.
Okay. Let's break that question down. Let's can you break it down for me a little bit?
Yeah, absolutely. So you have a price movement, whether it's going up or going down. First question would be, what causes that to happen? And what's the difference between the institutional traders and the retail traders?
What causes that to happen is supply and demand. Enough people want something. So if enough people want it, then some company has to create it or manufacture it to produce it so that they can meet the demand.
Mhm.
Institutional traders, they look back and they see that. It's like, okay, this company needs money. We're going to put money into this company, right? And then that company then sets prices. And as they set prices, then now we haggle. The more the demand, the higher the price, you see? And so that's what causes okay. And if people want something and there's not enough of it, well, if people wants if somebody makes something and there's not enough people to buy it, that's the supply.
Mhm.
And so then the market has to go down. Why? Because nobody is buying it. And so if you had a store and you had something on the shelf that nobody bought, what would you do? You put it on sale. They even get to the point where they put it on clearance because they don't want to just give it away. The price has to come down astronomically. And that's what we do. We make money as we see those imbalances in that market. But like you said, we're looking at charts, but we're really looking at people's activity. That's the difference, between us and retail day traders. They look at charts and candles. I know we're looking at people. Like, it's a person right there. It's a group of people right here. This is where the price is. The price can't stay there. It can't be supported. So we know that this price is going to go down. And so we start, operating in a way in which we know when we start selling, if you will, because we know that it will not go up any further. And what the institutional traders do is they make people think it's going to keep going up, and they keep purchasing at the higher price. I mean, they keep purchasing, but they can't sell it. And so I already know that you're going to have to sell it at a cheaper price. And so that's why I'm already in front of you.
Gotcha. And so that was very clear, and thank you for that. What is the purpose then of the institutional traders? I mean, it sounds like a very manipulative business. Why do they do this in the first place, and what's their place in the market?
Okay, so let's say you tell me you want to sell, pianos, and I'm like, okay, I invest in your piano selling business, but I really don't want to use my money. If I can use my money to influence somebody else to give me their money, and then now I use their money, I still keep my money, but I'm giving you money, and you're going to give me money off of what you're selling.
That sounds like musical chair.
That's what it is. Remember, I said money is not made; it's just transferred.
That's right.
Yeah, it's just transferred, and so that's why they do it.
I
You
like
know,
how you circle back around, and that really creates a beautiful picture of how this works. So
yeah.
wonderful. This is so helpful, especially for people who may have never traded before, and
Hmm.
even people who have traded, but as you mentioned, I don't know, earlier today or some other day, may not be completely satisfied with their P&L, their profit and loss
Right,
statement.
right.
Many have been trading and don't really understand it. So where do you come in? And I mean, I know you share a wealth of information. You share your own journey, your own path as a
Hmm.
master trader. Where do you come in, and how can you bridge that gap so that people can actually generate, wealth?
Hmm. Well, just in any endeavor, you have to have some leadership. You have to have some counsel. You have to have somebody who has been there and done that. And that's what I bring to the table. I've been there. I've done that. I've been trained 26 years. There's nothing in the market that I haven't seen. I've seen days like we've seen today, millions and millions of times, hundreds and hundreds of times. So I'm not emotionally vested. I'm intellectually vested. I understand money markets, and that is one of the things that that trips people up, is that they get their emotions involved. So where I come in is, number one, knowledge. Number two is I have a great understanding of what the market should and should not do. But also I have the ability to teach you in such a way. Like today, I said, hey, listen, go back to this time on this day. Go back to this time on this day. Go back to this time on this day. So I'm saying I'm not about to take that trade going in that direction, and I show you why. I just didn't say, hey, just trust my word and take my word. So what did that do as an intellectual like yourself? You're like, it's clear. I see exactly. So what did that do for your emotions? It calmed you down. It made you less anxious. It made you not want to get into the market because you can clearly see why. And then I have this ability to motivate, inspire, and coach. And It's just a God-given ability. Like I talk to you one way, I talk to Russ another way, I talk to Bonnie another way. I just that's just God just made me like that. People listen to me and eventually they see, and then now once they see, then it's over. So basically leadership, guidance, wisdom, prudence, discipline. That's what you get from me. And that's what the trade room gets. It gets a coach. Michael Jordan had a coach. Kobe Bryant had a coach. Tiger Woods had a coach. Like you have to have somebody that's looking at your blind spot. Hey, this is a blind spot, Eric. You can't see it, but we you did this or did that. Like you can't see it, but I can see it, and you do trust me to coach you. Okay, well, listen to me, and let's try it my way, and let's see what'll happen. See, that's what I bring to the table.
I love that. And folks, if you haven't really yet listened to the other podcast episode, Cornelius is not only a professor, or former professor, should I say, also a pastor, the author of several books, both on trading and leadership, management, and that sort of stuff. That's what I like, is that you bring to the table not only the knowledge and the experience, both relative to trading, but also the ability to teach, and as you just mentioned, to customize for the different people, the different emotions, the different aptitude and ability to grasp material. And when you take those two and add something totally amazing, which is not only your willingness, but your desire to impart your knowledge to others so that people can also be free, to me, that's the perfect storm in the best kind of way, because that's what allows people who may have one or two of those, but not all three. So I find that remarkable, and thank you for doing what you do day in and day out. So that is remarkable.
Oh yeah.
All right. So, we kind of defined a little bit the market, talked about what happened today, that sort of stuff, how the market works, and where you come in, what you bring to the table, how you help people create generational wealth. There is no secret. You have a program because, as you mentioned, if you're going to have a coach, a mentor, you need to have structure. You need to have a program, something to follow until you're able to stand on your own 2 feet. So why don't you bridge that gap for us and tell us a little bit what kind of course you offer and how different you are from what I like to call the back of the room, back of the hotel room courses that everybody knows about, or YouTube videos.
Well, I think going back to even what we're talking about, I think number one, the trade room, and one thing that I do want to bring up is that professional traders, they don't trade by themselves. Nobody trades by themselves. The people that's making all of the money, they're not trading by themselves. They hire analysts, and they tell and they teach the analysts, this is what I want you to look for. This is what I want you to look for. This is what I want you to look for. And so it's a desk. It's not just one person. So in our westernized, independent, driven society, where we think that being independent is great, it's not. There's power in human connection. We all have blind spots. We all miss something. We can all miss. I miss stuff. People say, hey, don't forget there's an announcement. And I've been trained 26 years. So if I was alone, what would have happened? I would have made that mistake. As much as I know about the market. So when you come and become a part of our program, we're creating a firm, a trading firm, without creating a trading firm. Because we're all in there together. We're all looking at the trades. The reason I show you my charts and talk about the other charts is because one day I want you to say, hey, listen, on June the 17th, this price hit this spot 4 or 5 times. I'm like, hey, thank you for telling me that. Let me look at that. See, now we're just getting better. But if I just try to just keep all the knowledge, hold all the knowledge, okay, and well, it's just on me so I can feel important and look good, well, I'm hurting myself and I'm hurting you. There is power in connection. When you get with us, you're not just getting me, but you're getting the synergy and the energy of an entire room of people who are on the same plane, going in the same direction, looking to land in the same land. Like everybody is on, like we help one another. It's just a beautiful thing that has been created. And so that's one of the things that make me different. Another thing that makes me different is I'm actually keeping up with the numbers, the percentages. It's not like we're just saying, hey, I mean, look, we have our P&L up on the screen in the trade room. Like, it's not like we're saying, hey, do this and try this and see if that works. Well, do this and try that and see if that works. And that's what makes me different, because people don't want to stand on anything. So they'll give you some platitudes. They'll give you some ideas, trade ideas. No, that's not what we're doing. Hey, we say, hey, listen, this spot is supposed to hold. And it's supposed to hold long enough for you to make your 3%. I am taking this trade now because I know that the outcome should be at least 3%. That's what makes me different. We're not just throwing dust in the air hoping you catch a piece of it. No.
Gotcha. Yep. So in other words, teamwork make the dream work. Thank you, Disney, for putting that in our brains.
That's right. That's right. It's real. And another thing is that I'm doing this not for money, but I'm doing this for survival, because I know that if you don't get a portfolio, that's my ultimate goal. My ultimate goal is for you to be making 3% a day. You have a portfolio with growth stock in it, short term, long term. You're getting dividends, and then you have hard assets. You have real estate, and then you have a great insurance policy, and then you have a trust to put all that stuff in. And now that's called intergenerational wealth that you can pass down, like I introduced today. Like, that's my goal. This has never just been my goal. And a year from now, 2 years from now, we're all going to look back and be like, I can't believe that I was fretting over 1% and I was trying to force trades. I have a full portfolio with all kind of stocks in there, and my net worth is just growing. And I'll be like, I was trying to tell you guys, hey, just take the little 2-3%, because this is not the end. We've got somewhere else to go. You know what I mean? So, I mean, it's just going to be a beautiful thing to where we look at a market like that today and we don't like it. We say, all right, well, let's switch over to the stocks and let's trade the stocks. Okay, bam, here we go. And we say, okay, well, I tell you what, this market isn't working today. We switch over to the stocks. That's not working. I tell you what, let's just look at our portfolio and feel good about it. Look at what our ETFs have done this week. And then we spend the rest of the trade time talking about our portfolio and not saying, I wish I had a trade. I didn't get a trade, So this is a whole movement, a program for survival, because you cannot make it without. See, you're not choosing to trade or not trade. You're choosing to win over time and or not win over time. It's not like I think I want to trade, I don't want to trade. No, you're not going to survive if you don't. And that's not anything I'm trying to say to scare you. You're not going to survive. You have to break down and learn something that you do not know. That's just simple. Growth. You have to grow.
Yeah. And you used the word survive, and I understand the context, but it's really thrive, because survival is what 97, 98% of people are doing, barely making ends meet. Whereas even if you have a good job, you have a good, perhaps even a business, and you're making decent money, it's still a survival mode until you really have the surplus and the ability to have this money leverage in making money for you while you sleep, which is not to say that you don't need to put in effort, because there is effort. It's not a free lunch, but it's something that allows you to create a generational wealth and to reap the benefits without slaving hours for dollars, basically.
But the day will come, Eric, where as you're growing the money the way we're growing it, and we go around the cycle and we start doing the long-term, short-term, and we go around and you start owning buildings, the day will come where some of you might say, I'm retired. I'm putting up my trading hat. Like I have created the full portfolio. This is just the accelerator of it. But because the idea is to get to where you're making money without doing anything. That's called passive income. That means now. That's the ultimate goal. Now, it may not be for you and I, because I think you have the passion that I have, which is to help other people. So me, I'll never get to the point where I'm not trading, because that means at that point, I'm not helping anybody anymore. You see, and I could have done that without ever doing this. So my mission is a little bit different, but I'm going to be happy to see some people say, they come in the trade room and say, hey, listen, I am now making $1 million per month with my portfolio. There is no need to trade anymore now. You see?
Absolutely. But that's also a part that I like, is that generational wealth doesn't mean sitting on a pile of money. It means having the resources so that, you and I and maybe others may be continuing to trade and to teach others to trade
Right.
the stuff.
Right.
But other people may have a different kind of endeavor to be of service to people in humanity. So that's what generational wealth to me allows, is to actually share your talents, your passions. It doesn't mean necessarily sitting on a beach somewhere and drinking Mai Tais.
Right. Yeah. So that's what it's going to be about. Because one of the things about it is that once you get to that point, you're going to want to teach your children, your children's children. You're just going to want to, because that's just, DHR takes kids away from people who don't want to care for them. So, it's like if you're not that kind of person, you're gonna pass the knowledge down,
Right.
just organically, and then it's just gonna continue to grow, and then you'll have some more things that you are able to do, and you can live. Most people are not living; they're just existing.
Totally agree.
Yeah, they're just existing, and that's what happens when you don't understand in this economy. Now, you can go to other countries and not do this and be well. Like, I got a buddy in the Philippines. Like, you don't hardly need any money to be rich over there. India, got another buddy in India, a pastor friend in India. $355 a month, man. Shoot, you're a king. But you can't live in a democratic economic society like this, capitalistic, market-based society, and not get involved in the markets and survive. Inflation does not go down. It goes up. It's never going to go down. Okay, so during COVID, it went down to 1%, but that was just to induce everybody to do what? The interest rates went to 1%. That's to induce inflation 1%, to induce people to start going back to the malls and getting out of their houses. Like 1%, shoot, I need to start going to spend some of this money, Right. And as soon as everybody started back, okay, well, we got a meeting, and we've decided, well, okay, now we're back into it. So that's just the deal. You can't live in unless you live in a third world country without being involved in the markets. You just can't live. You can exist, but you can't live.
Well, I agree with you. I have many former colleagues in those circumstances too, whether it's the Philippines, Thailand, or India, like you mentioned, different places in the world, and you can have a good living in those places. But let's face it, even in those places, it opens a lot more opportunities if you have the funds behind, and if you're trying to make it on a very thin line, thin income. So it's all relative, and money does not necessarily buy you happiness, but it certainly contributes to choices and possibilities. Not to mention that if you're going to help other people, it's a lot easier when you have the resources, financial or otherwise. So
now I know, Eric, people say that, and it sounds good that money can't buy you happiness. It can't buy you happiness, but if you ever get to the point where you have enough of it, you're gonna have a lot of days that you're happy. I mean, and I know I don't want to make money the end all be all, but it does make you happy, man. Like things that bother you now, not you, but things that bother you when you're not involved in this, they don't really, the things that make you unhappy when you get to a certain level, those things they stop making you sad. It's like, okay.
Right. I totally agree with you. What I mean by that is money by itself I mean, you can die on, $500 million.
Hmm.
You're still gonna die.
Yeah,
Uh,
yeah,
but if you do have the funds, you have a choice of what you're going to do with it. So
yeah.
happiness does not come from that only, but
Hmm.
it's an amplifier of character. I mean, if you're
Hmm.
a good person, someone who's got a vision, somebody who's going to do something, it's going to amplify your ability to use that money for that purpose.
Hmm.
And, if you're a lazy person who is not doing anything, who is just a total consumer with nothing else inside, there's nothing wrong with it, but that's also going to be amplified. So there's a character that money amplifies one way or another. And that's kind of what I'm meaning by that.
Hmm.
So, yeah, there's great appreciation for financial freedom for sure.
And I'm glad you just mentioned something that, and this is important. Like if you're a business owner and you're listening to me, this is you should hurry up and do this because number one, you already understand risk because you don't start a business without understanding risk. You're tough skinned. You don't start a business without being tough skinned. You have to be because you don't know when that dollar is coming in that door. You do all of that preparation. You buy you build, you buy, you prepare, and you have to say, all right, and turn the sign. I'm open for business, and you don't know who's coming in there. You don't know if the marketing is going to work or what have you. That's one reason. But another reason is this: is that most business don't thrive long term because not because they're unorganized, but they're uncapitalized. You
Mm,
see,
big difference. Yeah.
you can take your own self public. Think about what I'm saying. The reason the companies make it over the years because there's going to be depressions, there's going to be recessions, there's going to be industry changes, there are going to be policy changes, there are going to be governmental changes. Like literally, change is happening. So if people just move out of your place who buys your product, then your business is going to fall. It doesn't mean you're not a good business owner. It doesn't mean you don't know what you're doing. The market changed and the market shifted. Shifts take place, but what can help you work through the shift? If you have money coming in that has nothing, if you sell cookies, but you're not banking on selling cookies, you're banking on the money that's coming in, that's continuing to come in from another source. That's what happens when companies go public. They have the money coming in. If they don't sell, now of course they may change CEOs or they may change supervisors or whatever, but the money is still coming in. And this is better than going public because when you go public, the people who fund your business, they might decide they don't want to fund it anymore. They might decide that they want to quit and they want to do something different. Another company might come in and start doing better, and they say, "Hey, listen, we don't want to fund you guys anymore. We're going to start funding this company." And then now you got to go get other funding. But this, you make the decision. And you're going to always choose to fund your company. Whether you're selling a lot of cookies, no cookies, a few cookies, you still keep funding. And it only takes 30 to 45 minutes a day. So I've had people who own barbershops, they change their hours. They start opening at 10:30. They stopped opening at 8. Literally, they stopped opening at 8 o'clock because they say, okay, I need to make sure I get this money. So you could take your own company public. I give you an example. I own a paint company, right? Well, when I was painting and I needed to, I sold the company, but I owned one. When I needed to paint, a Walmart, 55,000 square feet, Fort Worth, Texas, Dallas, Texas,
Ooh, that's
Houston,
a lot of
Texas.
square feet.
Yes, yes. Can you imagine? So, okay, I need to rent a lift for 6 days. Okay. I don't have to borrow that money. I have taken my own self public. I
Mhm.
just rent it. Okay, I get paid net 90, net 60. That means you don't get your pay until they green light the store, which means they say it's okay. Well, it's time to pay these guys. Okay, well, I'm not going to pay for 90 days. I can't not pay them because they won't go to the next job. So you can still pay them without taking a loan. You see, without getting capital from another place. You understand?
Or
So
taking a loan from yourself then.
exactly. So now you just have the money. You need a new sprayer. Oh man, my sprayer broke. Don't worry about it. Go and pick up another one. Bring me back the receipt. Simple as that. So now it doesn't stop the progress. When you do commercial jobs, you have a time limit. And let's say something happens. A guy has to go home. 2 or 3 guys have to go home. A guy hurts himself. Okay, so now we're not going to finish on time, right? So now we're going to have to pay a fine. But no problem. I just pay the fine out of my pocket. No big deal. And instead of now I'm fretting, I don't know. Oh my God, we're supposed to finish in 7 days. It just makes life easier when you have money coming in and it's just coming and it's just coming. And that's what we do. That is basically what we do for people. We provide that.
Yeah, that's a fantastic perspective you just offered, and for sure. So, I just want to make sure we cognizant of your time, but also that of our audience. So for somebody who's like, hey, I listen to you and I'm interested because I know that continuing to do what I'm doing right now is not going to get me where I want to be. I can just, shut my eyes or shut my head in the ground, but, it's still not going to change the outcome. So how can they maybe get started or maybe get more information? How can they maybe attend a session to hear, listen, and see for themselves what you're offering, how the trading room works? Can you walk us down through that a little bit? What options exist?
You would call that number 919-324-5301. And when you call that number, you say, hey, listen, I'm interested. I want to know more about this. I want to talk to Cornelius myself. And that's one of the things that I do because I vet our group, very rigorously. As you know, you've been involved with us for a long time. And so we don't have any mess. We don't have nothing. It's just a group of people that's on like-minded. So, and I believe that you are too, because if you want to trade, you have to have some kind of, core about yourself that's good, because this is something that the average person, doesn't even think about. And that's another thing. And I know we got to go, but most people are not even conscious about how important it is to build wealth. They're not even conscious about it. They're not even thinking about it, and they're basically selling. And my mission is to help people not settle for the bottom, because that's what you're doing. If you're just a consumer, you're settling for the bottom, that's so you would, call that number and I will speak to you. And if after we speak, if you still are interested, without risking any money or anything, I give you a pass to come into the trade room. You just simply watch what we do. And then from that point, and the question is can you do it? Well, can you follow a recipe? And can you follow a GPS? Can you read a TV guide and go to the right number? Like, that's all it is. You'll be taught something that you don't know. And so, but once you know it, then we go. It's amazing how time people think, can I get it? You learn your timetables, didn't you? Like you can learn. You learn how to read.
10 fingers.
Yeah, you learn how to read. It's all when it comes to money that people get like think they're retarded. Like you haven't been retarded all your life. But now here I don't know if I can learn. I don't know. But you learned everything else. You graduated from high school. You had to go 13 years of school. You learned something, and it's not, and that's what it is, and so, fear keeps a lot of people back. But, if you're ready to, do something for you and your family, it's just time to, learn what's always been going on. This has always been going on since 1913. It isn't new. It's just new to you, but it isn't new. There's nothing new about it. And it would be a life-changing experience. I'm an expert at this. I've mastered it. I teach this better and faster than anybody else in the marketplace. In fact, most of our students, after they go through that learning curve, they make double-figure returns. We even give out awards for people who make double-figure returns in 1 week. They make triple-digit returns in quarters. They buy houses. They take trips to Italy and France. Like, That's how well I can teach this, and that's how well our team works, and that's how well everybody works together in the trade room. Like, we get results. The only reason you should ever take money out of your pocket and give it to somebody is if they can give you a result. If they can't give you a result, you shouldn't give them money. I get results. It's proven. It's documented.
And absolutely, I couldn't agree more. And just want to mention something, neither you or me are financial advisors. You just happen to be sharing with people what it is that you have learned that you're doing. But anybody studying with you, anybody trading with you is actually trading on their own. You just have the benefit of seeing exactly what it is that you're doing. So
Mhm.
I think that's a very important distinction to make.
Mhm.
Uh, because after all, it's not that there is anything to hide. It is simply that everybody is different. I mean, we all accountable for ourselves for when we click on the mouse, enter the market, exit the market. But it is amazing in there's so much learning taking place when you can watch someone doing that in real time with their own money, their own account.
Mhm.
And the community you mentioned is fantastic because
Mhm.
the market is a place where there is no competition between
Mhm.
people. There is
Right.
simply competition with yourself. And are
Right.
you willing to A, make the choice, the decision to actually learn it? And B, will you continue with it? and,
Mhm.
and are you able to learn into sometimes often the hard way, but,
Mhm.
but to learn your lessons so that you don't repeat the same lessons over and over? That's my perspective. What do you have to say, Cornelius? What advice would you give?
I don't even think this is optional. Driving a car wasn't optional for me. If I want to go from point A to point B, yeah, at first it was hard to stay in the lines, and yeah, I had to do it again, and yeah, my father told me to get out, you're not doing it right. But the next day I had to get back in because I refused to be paralyzed. I refused to have to settle for walking. I refused to have to ride a bike in my adulthood. I have to learn how to drive. And that's what I would say about this. And when you get involved in this, we have 4 stages. The first stage is to show. We got to show you something that you don't know. And then the next stage is to know, because now that you know, now you have to take that knowing that we showed you. Now you know, and then now you have to grow. That's step 3. That's stage 3. You have to grow. And in growing, you're going to fall off of that bike. In growing, you're going to make a right turn, without putting your signal on because you just forgot. Like, you're not trying to kill anybody, you just forgot. But guess what? You just got to keep going, and you might even have an accident. My daughter, she had an accident when she was young, but she's driving perfectly now. She didn't stop because she had an accident. Yeah, you might have an accident. You might bump into somebody, a fender bender. But that's how it is. You have to approach this like, in this economy, you cannot settle for not knowing. And I'm boldly saying that, and I'm unapologetically saying that if you just remain a consumer, you're gonna be broke for the rest of your life. Period. It's set up that way. It's just the system is set up that way. That if all you do is consume, it means you bring nothing to the table. See, we bring something to the table. We bring liquidity to the table. We help the economy by trading. We help companies by trading. We help balance markets by trading. We're bringing something to the table. And in this economic system, if you don't bring anything, you don't get anything. Simple. If you're just a consumer, you're not bringing anything.
Word, perfect, perfect clarity on that. Thank you. And for people in our audience, I mean, we have people all around the world trading. I mean, we spoke to
Yeah.
somebody in Africa
Hmm.
very recently, in Angola. You have people in India, all over the world.
Hmm.
And I know not everybody may be local, but correct me if I'm wrong. I believe you have a conference taking place in a few days in
Hmm.
Alabama. Can you
Hmm.
just say a tiny word, just in case we have people around who might be able
Sure.
to join
If
and get
you're
more information?
Sure, sure. If you're anywhere near Birmingham, Alabama, this Sunday at 10:30, we're going to have a conference, and it's going to last Monday, Tuesday, and Wednesday. And you're welcome to come to that conference. it would be something that would actually change your life, because you're going to learn something that you don't know, and you're going to see something that you've never seen before. And that'll give you a great opportunity to meet me and to really meet some of the other students and have an opportunity to have a hands-on opportunity to see what exactly it is that we do and that we talk about.
And that's what I love, the opportunity for people to actually see firsthand how it works.
That's right.
Have contact with the people, because it's one thing to watch us on TV, on social media, but it's totally different to shake hand and share information together. So, well, very good. We've been on for an hour. Is there a final word, something you'd like to share with us? Something that maybe I did not ask the right question that you would like to maybe add to it?
It's my conviction that you shouldn't settle for being on the bottom in a country like this. People get on inner tubes, they get on tires, they try to make it to this country from other countries. They walk across deserts, they jump across barbed wire fences. Like, it's a reason why people are trying to get to this country and other countries as well. If you live in a country and live in a place where you're a part of the money markets, it's 29 different countries involved in money markets. If you're living in a place like America and England and London and Africa and places like that where it's not a third world country, this isn't optional. You should make a decision today that you're going to change your life, and that's exactly what it will do and what we will do.
And frankly, regardless of where you are in the world, as long as you have an internet connection, you have most likely the ability to trade. And the proof is that you have several people from around the world trading such places. So let not that be a barrier of entry. There's always a way to get on the market. So,
yeah.
Well, folks, thank you so much for being there, for being part of this. You allow us to do these podcasts. And Cornelius, thank you again. You've been wonderful at carving some time out of your schedule to come and visit with us. Very valuable information. I will see you next time if everything lines up and you have more time for us.
That's right. I really appreciate you. Thank you.
Thank you, Cornelius. Appreciate it. You have a wonderful day. Bye-bye.
Bye-bye.